A lot of people are asking, what is mortgage insurance? And why do I have to pay this when I'm buying a home? So here's a simple explanation of that. A while back, when mortgage insurance was invented, everyone had to put 20% down before that. So just say on a $450,000 home, is if you brought $90,000 to the closing plus your closing costs. In order to make it easier for people to buy homes with less money down, mortgage insurance was invented. So what mortgage insurance simply does is it insures the lender on risk. If a customer puts down less than 20%, I'm going to show you an example of a $450,000 purchase. So if we do a $450,000 purchase, we put 20% down, we talked about that's $90,000 versus 5% down, which is only $22,500. That's a savings of $67,500. Instead of putting an additional $67,500 down, you just put $22,500. Keep your money, keep it in the market, let it work for you. Use that to pay off some other loans. Make sure you don't have any other debts other than your house. But that 5% is going to cost you roughly about $171 a month, because you have the mortgage insurance at 5% down. So over 5 years, that's about $10,260. But it's still much less than the difference of what you would have paid, the $67,500, to put down 20%. Okay, so you've only invested $10,260 more to buy your home for a savings of $67,500. So you've saved over $57,000 because you did mortgage insurance rather than wait to save up for the down payment, okay? Now, if you got the 20%, go for it, right? Put the down payment down, unless that's all your money and you're not using your emergency fund. Make sure you're not touching into your emergency fund, because you're gonna need that when you own a home, right? Stuff happens. Let's look at 10% down. If you've got 10%, that's a great alternative to 20% down, because that mortgage insurance is only $67.50 a month. It's only $4,000 over 5 years versus you paying $45,000 more for the extra 10% down that you're putting. Definitely a good benefit. Thank goodness for the person who invented mortgage insurance, because it definitely helps a lot of our first-time buyers and second and third-time buyers to be able to buy a home without having to save and collect 20% down. So mortgage insurance is your friend. It covers us, the lender, if you defaulted. If you defaulted and decided not to make the payments, it would make us whole when we try to sell that home and have to pay commissions and everything else to get it going. So if you have any more questions about that, let me know. Send me a message, reply back on here. Be glad to help answer any for you. Take care.